Okay, jump back into it. So I had a bit of a hiatus just from doing these sort of daily vids, weekly recaps and that. But yeah, look back at it now. So great place to start. Gold. What an absolute ripper of an end to the week for it all. And that. If I mean, I've still been posting on Twitter and that, so you can see a couple of my calls and that. So around the sort of 30 level and that, I was saying, look, we'd come through this little sort of short-term falling resistance. We had these three targets, or I had these three targets up on the top side here, being one, this horizontal, the falling resistance coming through here, and then this higher horizontal over here. And as you can see, it absolutely charged through, mainly back off the off the back of the US data on Friday night, the ISM, and I think there was a couple of other bits and pieces of data that pushed that along there as well. But it was the right combination of, news-driven sort of price action, plus also breaking key levels. So it was at the right place at the right time with the right news, and bang, that's the resulting thing. And I mean, just a quick look at this here. If it would take, so you can probably see it a bit better. If we take everything off here, you can just see the size of this candle in comparison to what we've been dealing with, like in terms of range. I mean, we had a pretty big sell down over here, but coming up into the top end when we hit those all-time highs, these were some larger sort of move candles. But as you see, we haven't had much for a while. They're very tight ranges for the last couple of weeks, and everybody's been sort of going. Well, not everybody, but a lot of people have been sort of selling off gold and selling off the idea of gold moving higher. And yeah, we're going down to 1950, 1900. If you go back to actually probably one of my last videos I did was we were probably around here, so it has been a couple of weeks now, but it was around this sort of 2000 level. And I said, look, if we get down under here, 1980 was the level that I was looking for to start buying again. And if we put this back on here, we can see, it pretty much clipped this, almost to the cent to the dollar of this lower zone here. And if you recall, like going back at all, how strong, and I always go on about this, about how strong. Let's see if we can make the chart. I was going to say, so if we make the chart a bit bigger, how strong this 1980 level, how crucial it's been. This is going back, some of this April last year when we were sort of coming up and testing. I think they were at the time, they were the highs, weren't they? I think, yeah, prior. I think that was the most recent all-time high kind of thing, yada yada. But you can see how crucial this 1980 level was here, holding it up to sort of push it forward. And then obviously on the way back down, how crucial it was sort of coming down here. It even sort of played its part back here when we came down off the all-time highs. You can see it's a little bit of a sort of like, it's a bit scrappy through this area, but if you get rid of these, you can see here, it played its role here, sold it back down. Once it came through, tried to hold a support, obviously didn't kind of get the continuation, bang back down. And you can see that it's played a pretty pivotal role time and time again. So put that stuff up over there still. So you can see that certainly this was the reason that, I myself and, obviously the market as a whole, as you can see, was thinking, okay, this is a good area where we were going to see a reaction. Now, it didn't guarantee that it was going to hold. It could have come up here and then sort of obviously followed back down to the bottom side here, but you had a little bit of this sort of sort of wider sort of medium term channel. You had this 1980s, which, as I just said, has been a very crucial sort of point, sort of historically over the last year and a bit, and so that was a great sort of base point for it all. Anyway, that was a couple of weeks ago. The here and now, we can see these three levels got obliterated, punched right out the top upside here. Now, this is the crucial, or not the crucial, but the interesting thing that I sort of find at the moment here. This is actually the highest, this is on a daily chart, this is the highest daily close we've ever had. I mean, if you go back through all these periods here, 2075 is a very crucial level. We know because that's sort of like long-term historical highs that have been tested multiple times and never really been able to close above. On this large sort of punch up here, where we had that sort of all-time high, I mean, you can see boom, boom, but it's above that level there. We've never closed. The highest we had was this second run after the all-time high, the second pushing up over here, came up towards 2090. But the actual daily close highest that we had there was 2077. We closed at 2082, so that's a $5 high close. Now, it's not massive significant, but this is just comparing it to all-time kind of stuff. If we look at most recent history, these are the highs. the dailies haven't been able to close above. And you can see the second attempt at trying to get up through here back at 2057, that resulted on bang that larger sort of eventual sort of sell down here. But this is absolutely dominated through to the top side here. So we're really coming up into some pretty heavy zones here. You can see this on a weekly as well. So if we zoom right out, so this is the significance of the 2075. I mean, we didn't quite make it these highest ones here. And as you can see, even marginally lower, what's this? This one came to 2069, so $6 lower. This one came to 66, so $3 lower. Look at the resulting sell downs when it failed to make those new highs, even marginally. I mean, look at it come all the way up here and then bang, all the way up here and bang, sold down. Obviously, we hammered through here sort of the other week, but again, the actual weekly close was here, 2072, and so we had a weekly close now, 2083, so it's a $10 close. Plus, look at this RSI. This RSI has definitely sort of got. If this decides to move, which I think it will, I think there's a good chance that we're realistically targeting this top wick here now. I would say that this RSI is definitely set there to support the move. I could very much sort of see a candle sort of forming like this, coming down to make a little bit of a lower wick, and then doing something. Oh, it's a bit fat here actually. How would it be? Something like this coming through this week. Well, it doesn't really line up with the bottom wick there, but basically, story being, I could see a bit of a sell down early to, like as I said. Oh, I don't know why that went so far back there. To retest these levels through here, 2075, only my sort of small sort of distance for a little bottom wick. But if we do bottom wick and then take out last week's high or Friday's high, which is 2087, I think this very easily could just be sort of charging to the top up here, 20. Not used to saying these numbers in relation to gold. 2119, and then all-time high is 2050. I mean, this all-time high is a bit, because with some of them, depending who you're trading with, like it all sort of got about the same, but stops being hit on different platforms. They're all slightly different, a couple of bucks here and there. But I remember trading that. That was a wild morning, this one here. I was trying to short as much as I could up the top over here. And the spreads were going out to like $5 and that, and I trade through IG, and IG were locking you out, and so you couldn't do any more. Like they would have been absolutely packing themselves. They would have lost a lot of money, I would have said, but subsequently look at the sell downs afterwards. So I think I don't worry for them. I think they made their money back easily. But so gold definitely that's the play of the day at the moment. It's been sort of grinding up through this period here. We do have a little bit of a pretty overbought sort of daily sort of candle here. So yeah, interesting to see how we go through here. Just trying to find, what did I have this one mentioned as? Why do I have that zone? Okay, yeah, just this little top zone here for these two previous highs. So you can see why this may have sort of sold down a little bit. I mean, coming into the end of the week, okay, that's fine. But why it particularly decided to stop here? Well, you can see, this is where sellers push this second push from. Now you push it back down. Obviously, this is that zone where that breakout. This is on the 4-hour massive breakout candle was, and then so we can see that the sellers have sort of pushed it down from this level a couple of times before, but excuse me, yeah, I reckon that's going to be a little reason for that. So with gold, I would expect positive. I mean, look, I said the same thing when this was happening. If you go back and watch my videos around that time, I said, look, we might get a pull down, a fake out, excuse me, a pull down, fake out, and then run it up. But they didn't. They just absolutely went for it. It was during Asia session as well. So as you know, sort of Asia's notoriously garbage for gold trades. But I guess that's it. They sort of snapped everybody while they were asleep. So paid the price for sleeping. But still, I will stick with the idea that I think we'll have a little bit of a sell down early, a retest, maybe 2075. Maybe even lower. Maybe some of these wick highs over here could sort of give us a little thing. So 2075, 2066. I mean, that's still a $15 sell down, particularly if it comes through Asia. And then I imagine we're going to go up. And again, the key is just to take out Friday's high, which is 2088, and that'll be your confirmation that we're going much higher with that there. So yeah, up around this 2075. This must have been a low time frame that I put this marking in. Goes back a little while, of course. But yeah, so anyway, short term, I would see maybe a little bit of a sell down, and then I'd imagine a follow through. Alternatively, we could just see them scratch it because this has come up on a lot of people's radars at the moment, and so it's just absolutely hammered up. So yeah, they could run it very early in Asia in Monday session as well. DXY. So this is really kind of the catalyst that kind of got it going, but you can see the size of gold's move comparative to how DXY has actually reacted here isn't a one-to-one sort of thing. I mean, it's not always one-to-one, but it's generally when things are running along as they typically kind of do, it does have a pretty strong one-to-one inverse relationship. Gold up, DXY down. DXY sort of definitely got smacked into the close, but as you can see, it's and this is why I say it's not one-to-one, because if you look at these levels here, where if we do this a side-by-side chart, yeah, so if we sort of mark this out, you can see on the right chart where the level, and you can see it on the left chart, it corresponds there as well. So the point being is you see how low DXY got down here. Gold was sort of moving up, but it wasn't breaking out. Same with this one here. It's moving up, but it wasn't breaking out. So DXY isn't even back down to these levels where gold was at 2047 when DXY was testing the support level down here. So you can tell that sort of like the reaction with gold is obviously not just purely, and it's not always, I mean, of course, there's multiple factors, but it's not always, just because that sell down on DXY, but obviously that is a large bulk of it. I mean, as you can see, they happened at the same time. DXY went smacking back down, gold went through the roof. So get back onto the one chart here. So meaning that if we continue to see a continued sell down on DXY here, I'd imagine gold to fuel and then continue gold sort of moving higher. So DXY in the short term, excuse me, we can sort of see, okay, if we put this out, let's put it on the daily. So it's been doing this sort of negative divergence for a while. For a while, so go back 2 weeks or so. As you can see this through here, it's never really sort of kicked itself back up, and it's tried to sort of swing up here now. Obviously, just off that news, which I'll get to in a second, it just got smacked on the nose. But you're not seeing a lot of sort of buying pressure and power sort of coming up here. This leading into this was looking like it could have gone bang retest and kept on going up here. It would have had the RSI to support it as well. But as you said, like it's smacking into that sort of known resistance area. We can see that it was support through here. It even got rejected earlier. So is this the Thursday? No, very early on Friday morning, local time. Came along here. It tried again off because we had the 2 bits of news that sort of came out, or 2 sets of news, I should say, coming out on early Saturday morning, Friday night, local time, whatever, end of the week, and it tried to sort of push up through here again, and obviously again, bang, sold down. So we know that the sellers are sitting in this area. We know that sort of if the news comes out and it's not supporting it, they're happy to sort of sell it. So now you're sort of looking at basically it being in this tight little range. Now, what we've sort of noticed, or not just noticed, but always, when you have these sort of periods of sort of consolidation, it tends to lead towards a continuation. So if we see this period through here, and this period through here, and I guess it's kind of pulled back into it, I suppose, but anyway, main idea is leads into it, consolidates, breaks out in the same direction. Leads into it, consolidates, breaks out in the same direction. This area here, maybe you could say this because it's sort of obviously it tried to sort of continue and sort of came back down into it, but not so much this period here. What I'm looking at is this little area here now. This is the same as these ones here, but you're coming into this in a negative fashion. And we can see that it's attempting to sort of get back up here and it's getting knocked on the nose. a couple of times over. We had the negative divergence, the RSIs, the buying pressures not coming back in to support any sort of further move back up. So really, I think sort of this area, like I've got this alert set down the bottom here underneath that bottom wick, that's going to be a big confirmation, in my opinion. It's sort of like with DXY in the short term. If we take out this wick, that's pretty much confirming you've got a high over here. It's come down. It's consolidated. It's had a couple of attempts, but it's had a few attempts back up here. It's rejected and then coming down here. So this will be giving you a high, one lower high. That's your low. That's your lower low. And then once we get that third one, you'd have lower high, high, lower low, lower low, and a lower low down here. And I think this will be a big confirmation for price coming back down a little bit further. As to how far, look, you can't really say. I still want to sort of be targeting this 100, 101 area in the medium term. I ultimately think we're going down here, 95. That's my sort of more sort of deeper call. But of course, we need to get underneath this 100 level. Under 100, I would not be looking to be holding US dollars long with much at all. I mean, there's a lot of stuff that have to sort of happen for us to get there. I mean, you've got equity markets at all-time highs. A big sell-off of that, well, that's going to, in theory, sort of stimulate the US dollar to sort of kick on a little bit more as well. So, yeah, there's a couple of factors, but anyway, that's a bigger picture. The here and now, I would say, is getting down underneath a close, underneath 103.60. For me, that is sort of looking like you can see it's tried to come down here. It's kissed this area a few times, and these reaction and buy-ups have just been very super strong. But these sort of areas here, like they're very reminiscent, sort of throwing us back a little bit, of back up over here. So this is around October. And as you can see, we were selling down, and look at these sharp moves back up each time. So this is what it tends to do when just before, obviously you can see the resulting action. What it tends to do before is sort of it's coming down, it broke its channel, and it fires back up. Dribble, shoots down, fires back up, and then obviously eventually, bang, it succumbs, and away it goes coming down there. So, we are sort of seeing dribble, fires back up, dribble. They didn't really fire back up this one so much in that, but certainly this one here, this candle sort of shot back up over here. So, you know what I mean? It's showing signs that we've seen before on a smaller scale, but, signs that we have seen before with the price action, where we have sort of seen it sort of the subsequently sell further down. Now, the thing with US dollar at the moment is it has been holding up very well because, as I said, you've got equity markets at all-time highs, and last 3 months, or 2 and a bit months or so, since the lows of December, so Jan, February this year, we've seen gold actually obviously putting in higher highs and higher lows and moving up. It's starting to grind across a little bit now, as I just said, but it's certainly not at its lows, while you're sort of seeing equity markets pushing all-time highs. We got Nasdaq broke out again and put in another solid close to it all. I mean, you look at these sort of things, they're right up the top, but we're not seeing the same with the DXY right on its ass. So, it means that sort of, it's probably part of the market thinking that, surely the equity market's going to sell off at some stage, and, they want to hold some US dollar and that just based on that. But certainly if we get a breakdown in US dollar, I think the money flows are going to go into gold to retest those all-time highs. And I think equity markets are just going to keep on punching on. What are we at? We're at 51.46 for the S&P. Like, that's a massive number. Like, I mean, it's gone up like 40% in the last couple of months. Like, it's insane, the run that's been on that. So, yeah, I think, honestly, I still think US dollars is going to be coming down. I think we've got more upside on equities. I think we've got more upside on gold coming through. So yeah, that's what I'm looking for at the moment. The first thing is to get the close down under 103.60, fill out that wick, move down under that, and as I say, confirmation downside move from that underneath 103.40, and then I think obviously we'll get into it a little bit more then, and we can start drawing up some levels of where we sort of think it might sort of get some little bounces along the way. But ultimately, I believe that will then be giving us something along these lines here. And that could be the sort of channel that we're looking at if we break down under here. So this would give us, I mean, it would make sense. You've got this high here, you've got this most recent high here, this, a couple of sort of lowers levels lining up here. So a break through this area here, maybe a little back test, come down here, 103, round number, same as the level of these sort of bounce areas here. Maybe a little bit of a rally through here. I don't think we're coming back up over here, but maybe a bit of a sideways churn and then move along like this. But certainly I think this is going to be coming in with more lower highs and more lower lows if we can break this wick of 103.40. Okay, and of course we've got Aussie. Aussie, shocker. I mean, it closed okay, but again, look, I've been saying for a while with Aussie that, you're not buying Aussie because they seem to be doing anything good. You're buying Aussie just because of the two, like US dollar and Aussie, at that moment, they're not sort of looking like, I mean, they'd rather sell US dollar than be holding against the Aussie. So, you get a little bit of a push up, but I mean, Aussie just cannot seem to catch a break at that. We did get a bit of this break of this wedge. We're looking through here, maybe the daily might show it a little bit better. Yeah, so you can see that we had a little bit of the break of this wedge. So it was coming through down to the bottom here. It never really fired out. As you can see, look at how tight these candles are here. And obviously, bang, 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 smack back down. So, at the moment, we've retested and bounced off this sort of kind of like breakout level. So you've broken out here, back test, stopped out anybody that sort of like bought the break but didn't actually get into it. It's obviously held quite well here. It's pushed up a little bit. Now the sort of key for it is to really sort of get up. I mean, it's got so many ugly levels above it, but realistically, look, if this does play out, the measured move of this wedge gives you a target of 67.60. But really, what you want to be doing is getting above. Firstly, you need to close above here. As you can see, this is the push up here, unable to do it, back in this like mad long sort of congestion zone. Yeah, let's just actually clean these up a little bit. So I make this call. The zone. So you want to get a close above, what's it, 65.70. Close up here to show it can do what all these candles couldn't do. Then you're coming up basically into this large congestion zone, and as you can expect, there was a lot of people that were sort of getting long, long, short, short, long, short. There was a big tussle and battle through them all over here. So that's your next level. And you want to sort of see, and you want to prove that you can do what these candles couldn't do. This was like 2 weeks of sort of just sideways grind in, what are we, 70 to, it's like a 50-point range, like every day, up and down, up and down, up and down. Traders, daytime, intraday traders paradise and shit with that one there. Unfortunately, I was trying to hold for a little bigger move back up here. Not the time to change your style. Back to the in and out, back to the bandit status, not in and out. Yeah, so the key levels I'm looking for Aussie here, above 65.70 for a close there. 66.20, 66.30, I think it was the highs. Yeah, 66.25. So, a close up above here. If you can get a close up around this area here, you got a couple of interesting things happening then. Okay, this isn't an actual channel because obviously this isn't based off anything. Could just be like this, actually, to tell you the truth. This is more just a projected idea of it all. But actually, no. Yeah, that was an idea I had. And no, actually, I'm going to redact the last 30 seconds of speech. Anyway, long story short is you want to do what these candles couldn't do here, above 65.70. You want to do what these candles couldn't do, above 66.25. You get a close up here, so still going along with what I was just sort of saying, just not to do with that sort of falling supposed resistance. That was just a thought. Get a close up above here, and I think there's a good chance that we could come back up and we could actually hit this price target. So a couple of key levels first, I'll just mark them out. Close above here, close above here. You do that, and I think that we could be looking for our price target over here. And I think that could be a little bit more of a recovery on the Aussie. If we do get back up around here, well, this is a chop zone on the way back down as well. So, again, I don't expect us to be necessarily putting in all new highs, but if this were to be the bottom, you can see, so we've got the 38. Again, this is another reason that a close up here would be strong. Above the 38 of this pullback here, that'd be sort of anybody trading the Fibonacci, that they'd sort of be taking notice of this, plus you're above these horizontal areas here. And this could almost sort of be coming out to a little bit of a head and shoulders as well. So again, if you wanted to sort of cut this up like this, that would be your head through here. Find where to put these things. So that would be your shoulder, your head. Didn't quite make it up to the top over here, but bang, back up over here. So a bit of a push back down. Again, this is just another reason you could be thinking, okay, we're going up over here. And that also gives you a pretty close price target to what we'd have from this wedge breakout as well. So this is another reason that I think that we could be getting up around this 67.60 area. Of course, we're not there yet, and this could just be a little flare up, and we could see everything sort of turn on its head. I mean, this is trading; anything's possible. But certainly, if you can prove these two levels, 65.70, 66, 66, 20, 25, whatever, around this, if we can get the closes above these levels, then I'm going to be targeting. I'm going to be buying a whack. Well, adding more into it, but buying more as a whack to target that 67.60 area for a completion. We've got a couple of heavier areas through there. We've got the 61% at 67 flat. So it's not going to go in one move, but if I get these two confirmations through here, that's where I'm going to be targeting. Okay, flip across, have a look at copper. Copper's fighting back. I mean, it looks like it just refuses to give up. But again, sort of like one of the last sort of vids I did was around this area here with this breakout. You can see better on the 4 hour. I said the same sort of thing here, like how sort of like, when we had these breakouts of these sort of pullback channels, they don't sort of come up and break straight away. This is a good example of what we're looking at with the Aussie as well. This is how these downtrend channels break. They very rarely get a strong super V. I mean, it depends what price, what time frame you're trading it on, but this is a good example here. You've got your downward channel. It broke out. It came all the way back, retested about this level, as you can see, where it broke out of this channel, coming around this zone here. So, 371, 371.2, whatever. It obviously held this one here and then fired back up and just hammered up back towards the highs. So, yeah, it's certainly something that it's refusing. And this is, again, it's maybe partly for holding Aussie slightly in the game. But really, if you compare the two, Copper and Aussie have had a very big sort of divergence. So they've got a pretty good relationship. So if we take this one off, and then we have a look at how Aussie moves with Copper, you can see here. Oh wait, where we go? You can see generally. Oh, jeez. You can see generally these two lines are following each other. So, excuse me, Aussie being this teal color through here, and the actual candles being copper. And you can see more or less it's a fairly good, like, it's moving up, Aussie's moving up, copper's pulling back, Aussie's pulling back, same kind of thing. But more recently, if you look at this and you zoom this in a bit more, we've seen a pretty big sort of divergence in that we saw copper come back, but Aussie hasn't really sort of recovered a great deal. As you can see, sort of like, they both pulled back along through here. Copper absolutely hammered up through here. Aussie's only back up, just above where it was, 2-3 weeks ago. Whereas copper sort of fired all the way back up over the top, almost near its most recent sort of highs. So you want to see this continue to push through and push a little higher. And I think that may again sort of help Aussie and sort of drag. Just not Yeah, anyway, so long story short, you just want to say it's not copper's not the only thing obviously that's going to be sort of holding up Aussie, but it's a good sort of indicator of sort of where risk is risk is as a sort of broader sense across the whole market. Obviously, copper being the most sort of widely used, well, one of the most widely used sort of metals in manufacturing. Obviously, as people have higher confidence, they're producing more, they're sort of expanding, and that's in essence risk on. And so, high demand commands a higher price. Copper goes up. Aussie is a risk asset. Aussie flourishes and goes up and moves well when the market's feeling comfortable and moving in risk on. So this is why it's been a bit sort of frustrating being sort of a long Aussie trader. Not predominantly long, but being long through this sort of last 2 month period with Aussie because it's just been, by all accounts, you got equity markets pumping at all-time highs, and Aussie is just failing time and time and time again. So, if we can see major breakouts, if we see sort of like these top levels here on copper go, and we can actually confirm, because at the moment you can still see these are actually technically lower highs, lower lows coming in here. If you can sort of buck this and actually get into a bit of a bull run on copper, we could see Aussie sort of follow through on that. And these kind of things are going to be happening, as I said, if the US dollar, if the US dollar DXY fails, we're going to see that money sort of pumping away because ultimately it's a risk off asset, US dollar. And when people aren't sort of so happy about the things moving forward and that, they sort of might be going, okay, well, let's buy US dollar, let's sort of hold off on things for a while. But, obviously, it's been moving vaguely up, but, equity markets pumping even higher. So, yeah, that's if we see US dollar sell off, this could be another thing where we see a bit more of a risk on attitude flow on to the other parts of the market, not just the equity markets. And you could see that stuff sort of push forward a little bit further. Let's get back onto what we were doing. So as you can see here, I mean, as I said a moment ago, we are still technically getting lower highs through these areas. However, this little sort of push back down here moved up very fast, back down even faster, and then back up even faster. So realistically, it's just sideways. You did have a little bit of a sort of fake out move to the bottom downside here because obviously this is sort of a bit of a support area a couple of times. And it tried to sort of continue down further coming down here. Sorry, excuse me. I'm slowly choking on my coffees. Um, this is a bit of a sort of fake out move down here. We can see it coming down quite strong, move back up. It tried to go for that second run and obviously rejected it, put in a higher low and bang, push back up the top over here. So again, the main levels we want to sort of see it get above is this big red area over here. So above 4,000 or 4 or whatever, however you want to call it, that to me is going to be a very significant area for copper to get to because we have sort of broken out of this long sort of falling resistance through here. But we did that back in November, and we saw from November and December as copper had this big resurgence coming through this long-term sort of triangle resistance. Aussie absolutely hammered. This is when Aussie had its big run through till was this end of January here. So through this whole period here, even with copper pulling back and then pushing up a second time, through this period here, Aussie ran from sub 63 cents, or maybe around here or so, somewhere around this area, but sub 63 cents up to 68, 69 cents. So if we can get a breakout at the top here and see this next resurgence and push on through the top side here, then I would say that we're going to see a follow through with Aussie as well. But for now, we are still technically putting in lower highs, lower lows. We just want to see this one. It's obviously come back here, consolidated, had an okay-ish close, not super bullish, but it's given the RSI a little bit of time to chill out. And as we push through those highs, I think this will be a very crucial area, getting above 4,000. That's a key one for me with copper. And finally, we flip across to China. China doing its usual thing. It just won't die. I mean, it came off this strong. These are weekly supports that's going way back. Excuse me. But it is sort of playing into this overall bigger picture that I had been I've been calling for a while, which could potentially be breaking out here, which is this large head and shoulders. And although it's slowly grinding its way back up here, it's not obviously not dead yet. But this would give us our shoulders. If this area here does fail, and by fail I mean sort of close down under 712, so quite a way off, but not impossible. Where are we at now? So only 1%. I mean, 1% is I mean it's a decent move in FX markets, but particularly with China, China or the yuan, this can be like a very sort of big move. It has had these large moves here, but realistically, this was in a one. This is on a weekly time frame here, so this was from August to November, 3 months. That whole period was only one and a bit percentage. So it can be a bit of an ask for it, but if we can see this fail, and as I said, look, if we get down underneath this wick where it is tempted to come back down here, we've seen a test for here support, buyers push back up again. If we see the sellers take that as another opportunity to push down and drive down under here, I'm going to put an alert here. If we, this is going to be a confirmation to come back and test that neckline. If we can get it closed down under here, here being 7178, I'm going to say that that's going to be definitely a test to come back down and test these weekly supports, which is at 712. And if it breaks through there, then my price target, as you can see, is down here, 690. I think that's going to be, if we break through this neckline and close down underneath 712, call it like 710 or so, just a fairly solidish close, not just by a minuscule little amount, but close down under there, and we can see a depletion of buyers that are willing to take it on at this level. To me, it's a pretty clear shot straight back down. There's not a lot really sort of standing in its way to come back down to 690. So I'll be definitely sort of shorting once we get down underneath this area here. Yes, so get rid of this one. But again, bigger picture, the here and now. It's attempted to sort of come back up. It gave up this little channel that it was attempting to sort of come through. It's given it up, but it just won't sort of die. It just won't get down there. So it's really just doing its sideways grind thing at the moment. But as you can see, it's tested here a couple of times. So if we come back down under here, that's when I'm going to be calling it for further move to the downside with Asia, with China, basically. All right, that's it for a minute.